Hey everybody, it's Chip. Just wanted to get back with you regarding a number of things. First and foremost, I wanted to make sure that you've noticed, and I hope you are watching and enjoying videos of my latest projects from a renovation perspective. We've got three things going on right now. One called the Boz Project, another one called the Church Street Project, and another one called the Oakham Project. And so I'm going to continue to upload videos regarding those renovations and just kind of show you what's going on. I just find it interesting and I love this part of what I do. And so I wanted to share it with you. If you like those videos, please be sure to put the thumbs up, like on those things, and then also subscribe to my channel because I would love to get my subscription numbers up to share more information with more of you, and I would love to hear from you, so comment when you can. And without any further ado, here we go. A little bit of housing market update, economic update. Big week and a half we've had here between a midterm election. Inflationary numbers came back out last week again and looked better. The markets responded unfavorably to the election, and then the markets turned around and responded extremely favorably to the lower inflation numbers. It came out 7.7%, higher inflation over last year, 7.7%. Inflationary gains over last year. Not a great number, but a lot better than the 8+% number we've seen, almost 9% number we've seen in the previous quarter or two. So with that said, heading in the right direction. The Fed's interest rate increases are obviously doing something. They're working. People are spending less money. Corporations are spending less money. Small businesses are not hiring as robustly. As a matter of fact, you may have seen Amazon, big companies, FedEx, Amazon, laying off workers. We've already heard of Meta laying off a number of workers. And layoffs in the real estate industry are pretty rampant right now with Redfin, Zillow, Nextdoor, Opendoor, all shedding people. Keller Williams shedding people. So especially in their technology and mortgage sectors. So there's a lot going on right now, but this is all by design by the Fed to slow the economy and even hurt the economy to such a degree that inflation numbers come down. And obviously at 7.7% versus an 8.3% in a previous report, much better, but still high. So there's still work to be done. But I caution the Fed, not that they're listening to me, but I caution the Fed not to continue to increase rates significantly any longer. Let it pause. Let's see what happens. We've got to let this increase in rates that's happened over the last several quarters catch up with what's going on the ground, and hopefully they'll do that. However, my thought process is, my prediction is, in December, when they meet again, we will see another rate increase, but probably a half a point versus 75 basis points. And so maybe they're going to slow it down by lowering the rate increases. But I don't think they need to increase rates anymore, at least for a few months. Wait a few months, see what happens, see how it plays out. If inflation continues to go down based on what you've already done, that would be fantastic. If not, you can pick it back up again. I still hold true to the fact that I project that by the end of 2023, we're going to continue to be in a recession, a deeper recession. The housing market will continue to be in a deep recession, which it is already in. And by the end of 2023, the economy will be slowed to such a degree that the Fed is going to have to scramble and actually start lowering rates again. And so we'll have to wait and see what happens with that. That would be a great thing because I think that would spark the economy. It would lower mortgage interest rates and short-term borrowing rates to such a degree that people start spending again and people start hiring and spending on capital if you're a company again. But that's a year from now in my projection. The mortgage rates over the last week and a half have dropped significantly, which is fantastic in my industry, in the real estate industry, which is the biggest update I have for you. Mortgage rates are back in the sixes in a lot of cases, and even low to mid sixes for 15-year mortgages, high sixes to low sevens for 30-year mortgages. For a period of time there, 30-year mortgages were 8% or higher. So they've come down with the positive inflation numbers. The positive inflation numbers help that. And hopefully, if that maintains and continues, mortgage rates will probably not decline significantly, but more steady and stay consistent. And as long as we have mortgage rates somewhere between even, 4.5% again would be great. But even if it was between 5, 6, 6.5% on an ongoing basis, but steady and predictable, then I think that the housing market can recover fairly quickly and jump back in. There are still things in the marketplace from a real estate perspective that cannot be cured from people not buying and not selling. Mainly the number of housing units needed to house us as Americans. We're short. We need more housing. We are becoming a renter nation because of the unaffordability of housing between the last year and a half of price escalations, significant price escalations on housing, but also now on interest rates, hammering the mortgage market. Unaffordability is at an all-time high, so a lot of people are reverting to rentals, which rents are high too. So it's just a real conundrum for buyers and sellers out there who may want to buy in this market, but just say, gosh, I can't do it. I can't afford to do it. I think there's going to be a reprieve coming down the pike. On a buyer side, another reprieve. We are seeing more and more seller paid assistance to buyers when they're submitting offers. So keep that in mind. If you're house hunting and you have a realtor, keep in mind that not every time, but in many cases now, it's okay to ask for closing cost again. Potentially okay to ask for assistance in buying down your rate. The seller may assist you in doing that because right now there are more sellers lowering their prices than new sellers coming on the market with brand new active listings. So price reductions are happening. Closing cost assistance is happening. People are now again providing home warranties to sweeten the pot a little bit for their homes. And so the incentives are back out there for the buyers. Prices have not come down significantly. They're still paying, market rate for the houses. However, there are many sellers who are still overpricing, thinking it's still like 2021, which it's not. And so those overpriced homes are just being, the prices are being slashed on a daily basis. I'm looking at the MLS in our local market, and there are typically more price reduction homes than there are new listing homes coming on the market. That tells you something. So a lot's happened over the last week and a half. I wanted to catch you up on that, and then also remind you to check out the channel for check out the progress on the Boz project, the progress on the Church Street project, and on the Oakham project. And I'll try to keep you up to date on that stuff as much as I can. And like and subscribe. I'll talk to you later.